Hey everybody, Dan here, stockmarketmentor.com, and I want to look at a bearish wedge pattern here. But first, I just want to mention I am selling the 59-minute trader course for under $1,000, which is, to my knowledge, the only time I've ever done that. This is an awesome course for what works in this market now, which is really like day trading, the first hour of the day trading. So if you're interested in that kind of stuff, I suggest you get this course. Am I selling it? Yeah, hello, of course, that's what I do. But I'm just telling you this, we have had nothing but positive feedback from people who have taken advantage of this course in the past. It's worked for a hell of a lot of people, and I will tell you this, I guarantee you that you will make money from the things that you're learning in this course as long as you apply what you're learning. I'm not saying like just go do whatever the heck you want and you're going to make money. No, but if you apply the formulas and the strategies and the approaches that I teach you, you're going to make money. You actually won't be able to help it. Okay, so anyway, that's all I got for you. Just do your thing. Either do it or don't. Now, let's look at ARK here. What I'm talking about, I shouldn't even say that. Look, some of you guys, I know, you're still worshiping at the altar of Kathy, and she's the world's most amazing stock picker in the world. We'll see if you're still saying that when this stock's down 80% from the high, which personally, I would say it's at least going to do that. But that's not what I'm talking about here. I'm talking about this particular pattern, and here's why. When you see a stock within a downtrend, and then it starts making higher highs and higher lows, but it hasn't broken the downtrend, that's typically it leads to a poor outcome. Because I call it like water pouring out the end of a garden hose. You could kind of say the same thing here, where the highs and the lows are, they're both higher, but they're kind of converging. And so the way that you can really watch this for this pattern is, first, it's got to be in a downtrend. Got to be in a downtrend. And once it's in a downtrend, you could have even looked back here and see the same kind of thing. It's in a downtrend, from 130 down to 90, I would say that qualifies as a downtrend. And so then it finds this support here, and then it starts drifting up, but it never breaks any moving averages. It's still in a bearish situation. Once this stock falls below, you can see what happens. The same thing here. Didn't challenge these moving averages, and then once it falls below, you see it. We can do the same thing here. You can do the same thing here. I'm doing it right here. And so the point is, right now we are in big bearish territory here for this stock. There are any number of other tech stocks that would give you the same patterns. The reason that I'm pointing this out is this. This is not the bottom. Now, but I want to distinguish something here. Just because I'm saying like, oh, well, this is not the bottom. I'm not even saying this stock's just going to continue to go lower and it's going to implode and this and that. I think a better way for me to say it is I just don't think it's a buying opportunity because you've got markdown phases, and then after the markdown phases, then you've got this period of accumulation where a stock's going to drift sideways for a while. I don't want to be in the sideways drifting. I want to be in the next phase, which is the mark up phase, where the stock's done being accumulated, it's done making a base, and now it's moving up from there. And this is not that stock. This is the other way around. But I'll leave you with this, and it's something that I emphasized in our strategy session today, and that is the market always looks ahead. The market anticipated this crappy economy that we're in right now. The market's anticipating even a bigger crap in the economy. And so you can see the stocks are going down. But at some point, even as the economy worsens, it gets worse and worse and worse, all of your kids are back living with you, and they won't do the damn dishes. It gets worse and worse and worse, but the market doesn't continue to go down. It kind of drifts sideways, and then, like, lo and behold, you're actually seeing some stocks move higher a little bit, and you're going, whoa, what the heck's going on with this? What's happening is the market is seeing the end, and it's saying that the end is near. And when I say near, maybe the end is 6 months near or a year near, but the market is anticipating better times ahead. So don't just keep looking at the news flow. Look at the tape. Look and see what the market's doing. Right now, the market's killing you, but there's going to come a time when it's not doing that anymore. So stay engaged. Don't be losing all your dough, but stay engaged, and you're going to wind up being just in a great position. In fact, I'll read you what I was just reading from one of our members who said, Dan, I was writing in the forum. He goes, Dan, this is how you saved me lots of cash in March of 2020. I had a record year in 2020 because I was 100% in cash and I pounced when it was safe. I appreciate you continually applying the same methodology. And that's what we're doing. We're just applying the same old thing, knowing that sometimes that methodology is going to make us a bunch of money. Other times that methodology is going to keep us out so that we avoid losing a bunch of money. So anyway, that's all I got to say. Have a good weekend. I'll see you Monday.